Welcome to Within the Frame, where we bring the most pressing issues across the globe into focus. I'm Kim Mokyeon. After 106 days of conflict, the United States, Israel, and Iran have reached a ceasefire agreement, bringing an end to the war in the Middle East and easing fears of a broader crisis. The reopening of the Strait of Hormuz has sent oil prices lower and lifted global markets. Korea's KOSPI has surged back above the 8,000 mark, with some even eyeing the 9,000 level. But with the first FOMC meeting under new Fed Chair Kevin Warsh approaching, investors are now watching whether this rally can continue and how interest and exchange rates and global capital flows may shift in the months ahead. To discuss this outlook, we are joined by Shin Se Don, Professor of Business Economics at Sookmyung Women's University. Big welcome, Professor.
Good evening.
And also joining us is William Brown, former member of the Board of Directors at the Korea Economic Institute of America, and who is the principal of nae.com. Good to see you.
Yeah, good morning, or good morning my time.
Good morning, Professor Brown. So let's begin right away. The U.S. and Iran, like I've said, have reached a ceasefire agreement. What do you think will be the biggest impact of this agreement on the global economy and financial markets?
Well, in a way, it's already happened. The price of oil is plummeting today and over the weekend. Actually, it's been coming down for about a week as there's been more and more talk of a peace agreement. So yeah, it's all positive. I don't see very many negatives here for almost everybody. Not everybody, of course. Some people like high oil prices. If you're producing oil, you like it. But yeah, I think it's a very, very positive warning for America and for Korea.
Right. It's certainly, we've seen prices of oil stabilizing following the announcement. Then, Professor Brown, how low do you expect oil prices to go further? And could low oil prices and lower energy costs affect U.S. inflation and the Fed's policy path?
Yeah, I mean, it's always dangerous to predict a price because we usually say, the current price is the one that millions of people have decided upon. And so who am I to predict it's going to be up or down? But now we have this very good news. And I think actually over time, a lot of people have misunderstood the nature of this collapse in the oil shipments through Hormuz. It's a kind of block that, it can't live forever. It's going to break at some point, and now it seems to be breaking. So I think it's quite predictable that the oil price would come down. I would say, and most people think it'll stay up for a while. I think it'll come down quite quickly. It's about the level it was a year ago for the crude oil, the benchmark prices, and I don't think it'll go much below that. But it's now about $80, I think, Brent in Texas. So, it could come down another $10, I suppose. But the impact on the markets is already very, very strong, maybe already kind of used up. So we may not see a continued big increase in stock prices, for example.
Right, so we could be seeing figures that we've been seeing not so long ago. But when we turn to South Korea now, Professor Shin, the KOSPI climbed above the 8,500 mark after the ceasefire announcement. Do you see this as a temporary relief rally or the start of a broader uptrend?
Well, when it comes to the issue of stock price, not just in Korea, but in any other country, whether this surge right after the ceasefire announcement will be temporary or permanent, I think I cannot be sure because it's not sure how steadfast be the ceasefire agreement between the two countries on the one hand, and on the other hand, macro financial environment in Korea, especially including interest rate and inflation, is going to turn out. How is it going to turn out in the second half? I think there's a lot of risk factor surrounding the stock market. So, 8,500 is, for many people, 8,500 is too high. So even without the Iranian war or even without the ceasefire, I think the price will go down significantly, probably below 7,000 or 6,000. So considering everything around that, I think it's very dangerous to predict, like Professor Brown mentioned about the oil price. I think it's going to be very difficult whether this surge today, reaching 8,500, is going to be another round of broader uptrend. I'm not pretty sure.
Right. Of course, we're just speculating as of the moment. Now, when it comes to the $1 exchange rate, Professor Shin, it remains around the 1,500 level despite easing geopolitical risks. What is driving the weak won? And do you think the government's response has been appropriate enough?
Well, to me, as a financial economist throughout my lifetime, specialized in exchange rate, fundamental reason for the weakness in won is because interest rate gap between the United States and Korea. United States, the key interest rate is 3.75, and in Korea 2.5. So the gap is 125 basis point, and it is huge. That interest gap has been driving Korean currency throughout the last, I think, 2 or 3 years. And that is exactly the same when it comes to the exchange rate of the Japanese yen. The gap between the Japan and United States is even higher. So with that fundamental interest rate gap above 125 basis point, I think it's going to be very difficult, to sustain the exchange rate down below 1,500. So I think sooner or later, Bank of Korea will dedicate itself to correct the gap, but how much and how fast, that is the question. But I'm pretty certain that the Bank of Korea will raise the key interest rate from 2.5%, possibly 2.75, or even 3%. And that, I think, is going to be most important policy measure, as long as stability in the exchange rate is concerned, that the Bank of Korea and the Korean government has to conduct.
Right. So we will go back to the BOK's decision as we speak further. But before that, let's also talk about the FOMC meeting coming up, which is the first under new Fed Chair Kevin Warsh. Professor Brown, I might have to ask you to speculate again, but what decision do you expect there, and what key signals should markets watch for?
Well, unlike the oil price, this is very easy to speculate on. Now they're here in America, they're betting markets for everything. I really don't like it, a lot of politics. But there's a betting market for what the Fed is going to do, of course. And about 2 weeks ago, I think the betting market was saying 68% of rise in the interest rate. Well, that would hurt Korea greatly, or hurt the won greatly if we raised it more. But now last week, the betting market had it down to, about even. Now, if you look at it today or on Friday, even before this peace agreement, it was 98% sure that the Fed would keep rates stable this week. So I'm virtually sure. Nobody's saying they're going to raise or lower. The issue, though, is really longer term. And the new Fed chairman has a reputation of being a hawk, meaning he's tight. He wants to be tough and raise interest rates generally. Now, Trump, of course, hates that idea, and Trump, they must have had a good discussion before he became Fed chair. So what is going to happen, say, 6 months from now, a year from now, that's the key question. And the problem for the U.S. may not be quite understood in Korea, but the U.S. has two huge deficits, trade deficit and the fiscal deficit. Both are nightmare proportions. And Trump has been working on both of them with the tariffs, for example. The tariffs kind of eat away at both of those deficits. But the results are not quite clear. It's dampened both of them a little bit, which is very good news. But the longer term, we still have these huge deficits to finance. And that keeps the interest rates, the longer term interest rates, fairly high. So mortgage rates are like 6%. That's way over inflation. So that's trouble. That's trouble for our housing industry. So there's a lot of difficult decisions that will have to be made, say 3-6 months out. One thing I failed to mention, though, earlier, you asked the impact of the gasoline or the crude oil prices on U.S. inflation. And the last number that came out last month was a high. You know, we had 4.2% CPI inflation year over year. So, but that was hugely related to a huge jump in gasoline prices, which already were coming down and now will come down even more. So I think the CPI will show very little growth for the rest of the year. That will make it much easier to not raise interest rates, and I suspect there'll be a lot more talk about lowering them.
Right, so we will keep close tabs on the latest decisions and the messages coming up. Now, beyond that, Chair Warsh's first press conference would also have a huge effect on markets, we believe. Professor Shin, if his message is more hawkish or dovish than expected, what impact could it have on Korea's stock market and exchange rate as well?
Well, you know, just looking at Chairman Warsh's previous kind of speeches, I think it is really difficult to say whether he is a dovish or hawkish, because he has mentioned many confusing, you know, statements. And also, tactically, I think Warsh's tone this time would be intentionally equivocal in the sense that he doesn't want anybody determine he is too hawkish, nor he would, you know, like, you know, people say he's a dovish. So he will remain kind of a dubious stance throughout the first kind of FOMC meeting. So on inflation, he will probably emphasize the hawkish kind of statement, but on financial stability, which is also a very important kind of element, and the role that the Federal Reserve has to play, I think he will probably mention the dovish kind of statement. So at his first meeting in FOMC, I think it's going to be very difficult to judge, his stance on whether he is a hawk or dove. So we should not expect very much. And I agree with Professor Brown that this time, in the June meeting, FOMC decision will be very certain that there is no change in the rate, and everybody expect that, and they will concentrate on how the future stance of FOMC be about interest rate, and that I think depends upon inflation. I have a little different view on inflation because change in crude oil price, unlike the change in every commodity prices right after the COVID-19, even if it goes down below $60 per barrel, I think it would have very negligible effect upon CPI. So I think CPI is going to be the headache for FOMC for the second half of this year. And in that reason, for that reason, I think it's going to be very difficult not to raise the rate at least 2 times, this year. That is my perception about FOMC's future behavior.
Thank you for that opinion, Professor Shin. Now, when we look ahead, global investors are continuing to favor U.S. tech giants and newly listed companies like SpaceX. So after the ceasefire and the FOMC, how likely is foreign capital to flow into Korean stocks, and what could trigger outflows, Professor Brown?
Yeah, this is one thing I've been looking at quite a lot, and for Korea, because Korea is in an unusual situation with a very strong current account trade surplus. Its fiscal deficit is large, but not compared to other countries. So you wonder, why is the won so weak? And I think, it's right, the difference in interest rates is important. But I think more important is really the predilection for Koreans to invest abroad rather than internally. So if you look at the recent capital account or financial account balance, produced by Bank of Korea last a couple of weeks ago. It shows, a large, of course, a large inflow on they make a lot of money on trade. You make a lot of money on trade, but you spend it all on investing abroad. That sounds good in ways it is. In many ways, it's very good. But that money going out of Korea to America, largely, to SpaceX, it pushes down the yuan. And so that's kind of the trouble. And raises potentially interest rate costs in Korea. So domestic investment in Korea is, aside from the really important semiconductors, is very weak, especially in construction. So the the Bank of Korea has a very difficult job here, trying to square the decline in the yuan and the flows of investment. I would argue Korea needs to try to encourage more foreign investment into Korea. It's good to invest abroad, but it's also good to bring in investment. Mm-hmm. Now, the one difference, though, is that there's a huge amount of American investment, foreign investment, into your two huge companies, Samsung and SK Hynix. Those two companies, the portfolio investment, they're almost half owned by foreigners, and about half of the foreign ownership is American. So there is a large foreign inflow of money into those two companies, but not into the rest of the country. And the rest of the country doesn't do, I think, enough of their own investing. So I'm thinking it's the Korean government they've talked about it for years, ever since I can remember, for 20, 30 years. They've always talked about improving middle-sized companies, middle and little higher-sized companies, making them easier to invest in. I think they need to push to the floor on that and really try to grow up more middle-sized companies in Korea that can induce foreign inflows of capital. And by capital, I mean by equity capital, not so much borrowing. That's kind of my view.
Right.
But of course, others may have quite different views.
Right. A very important point that you've made. Professor Shin, do you have anything to add on to that?
Well, as a Korean economist, we concerned about, Samsung, Hynix. They have exported a huge amount of money. And the problem is that they don't bring their cash into Korea. So, Professor Brown mentioned foreign investor. The more serious problem is, Korean company who made a huge trade surplus, they don't bring back that cash. I don't know why, but there are many, the aspects about it. But that, I think, is one of the reasons that, even with kind of a huge current account surplus, Korean currency has been weak throughout the last year. So I think that was another problem the Korean economy is facing right now.
Mm-hmm, right. So going back to Korea's Bank of Korea that we've touched upon a while ago, new Governor Shin Hyun-song has hinted of a rate hike. Professor Shin, do you see a rate hike happening as early as next month, and what is your outlook?
Well, next month, month is July. I think it's a 50-50 chance in July. And the action of the Bank of Korea depends, first of all, the FOMC rate decision the second half of this year. And also it depends upon Bank of Japan's, rate policy second half of. So we judge our rate policy dependent upon United States and Japan. And considering, future movements in the Bank of Japan and the Federal Reserve, I think there's a pretty good chance that the Bank of Korea has to raise at least twice, because already we had 125 basis point lower than the United States. So even if, United States doesn't change the rate, I think that there's a strong chance that the Bank of Korea will raise it at least twice this year.
Then what about the other, policy paths in the second half of the year, Professor?
Oh, well, there's a recent report by myself that, even though stock price has been over 8,500, And the economic growth rate for the first quarter was 3.8%. So everything seems to be so fine. But if you look at the employment figure, the month of May figure shows that 40,000 decreased, and decrease in employment has been very rare for the last 20 years, only in times of COVID-19 and only, briefly after the, martial law 2 years ago. So the employment situation has been getting very worse for the last, I think, half a year. So if that trends continue in the second half, I think real economic growth and private consumption would be significantly endangered, and that's going to have a significant effect upon real growth on the one hand and the stock price on the other. So other than interest rate policy, I think employment figure seems to be the very critical kind of aspect of Korean government as long as economic policy is concerned.
Right. So balance between supporting growth and containing inflation as well will be crucial moving forward. But as for now, we'll have to conclude our discussion here tonight. Thank you so much for your insights, Professor Shin.
Thank you.
And of course, Professor Brown as well. We really appreciate it.
No, I appreciate being on. And, I grew up in Gwangju in the 50s and 60s.
Wow.
So I want to
Okay.
give a
Shout out.
a show to everybody in Gwangju. So I want to say hi to everybody in Gwangju. Honan Gwangju, not Gyeonggyeong. Honan Gwangju.
We'll be looking
Nice to
forward
see
to
you. Okay.
yes,
Yeah.
seeing you again. Thank you so much to you both.
Thank you.
And that'll be all from us on Within the Frame tonight. Be sure to tune in again next time as we continue to explore the stories that matter. Till then, stay informed and engaged.